So we'll run through a brief overview before we try anything new. So when let's take a look at asset module and its configuration. So at the first part of the, like any other module in SAP, we have to do the organization structure. So when we are configuring the asset organization structure, the first part is as recommended, we copy a reference chart of depreciation and the depreciation areas. That is the first part. Now, you can choose the standard, which is because SAP has standards example setup already predefined. You can copy it and then delete what you don't want. So in the first step, we copy the reference chart of depreciation, where we choose a chart of depreciation which comes close to what we are looking at. We just think of a numbering convention for our chart of depreciation and we hit the enter button. With that, we have created a new chart of account. But this chart of depreciation will carry everything from the sample. So after we have done the first step of copying it, it will copy it with our number and whatever the description was of the chart of account we copied. So if we copy the German chart of account, it will be sample chart of account Germany. So in the next step, we will rename the chart of account, chart of depreciation, sorry, to the chart of depreciation of our company code. That's 2 steps over. In the third step, we will look at the depreciation areas. Because we have used another chart of account as a base, it would have copied all the depreciation areas created for this chart of account. Now, if you look at the most of the chart of depreciations set up predefined by SAP, you would have book depreciation, which would be normal depreciation area would be 0, 1. The depreciation area and the chart of when you copy the chart of depreciation will automatically be created for you. There will be quite a few. So, example 0, 1 for book depreciation, 0, 2 for special tax depreciation. There'll be a depreciation area for special reserves, net worth valuation, tax balance sheet, cost accounting depreciation, consolidation balance sheet in local currency, consolidation balance sheet in group currency, book depreciation in group currency. So there will be quite a few set up. So in most cases, no one needs so many. Very few companies need so many. So the next step is you delete the additional depreciation areas you don't want. For the purpose of your class practice, just keep 3 depreciation areas, delete everything else. In the next step, that's step 3. In step 4, we will assign the input tax indicator for non-taxable acquisition. So what are we doing in this step? In this step, we specify an input indicator as per company code. The system will then use this indicator when you post acquisitions that are not subject to tax, but which are posted to accounts that are tax relevant. So as a rule over here, the norm is we assign input tax V0, which is a 0% input tax, which some of you all might have already configured in the system. And we will assign output tax A0. I put up a little note on taxes. Have any of you tried the configuration? It's a small configuration.
Yes.
Okay, great. In the 5th step, we assign the chart of depreciation we have just created to our company code. So there's another step in your document which I put it as optional. You don't need it. You can assign the main asset account number across company codes. Therefore, for every company code, you can determine for which other company code the number sign is carried out. In this step, you define cross-company code assignment of the main asset number. If you do not want cross-company code assignment, you need not define anything. We do not want to put this because the number range then is across all company codes. So if you have 4 company codes, you created an asset, that number will be utilized by all other companies. It will be shown as utilized by the other 3 company codes too. Over here, we will not do any configurations. Now, step 7. This is where you specify account determination. Now, what is account determination? Account determination basically is defined by a key. The account determination links the asset master record to the general ledger to be posted for accounting transaction using the asset class. Again, I'll say this. The key of an account determination must be stored in an asset class. So when you create an asset class, you have to ensure that the key is assigned to it. The account determination links an asset master record to the general ledger account, which it is to be posted to for any accounting transaction using that asset class. Usually, as a rule rather, we need at least the same number of account determinations as you have balance sheet accounts in your general ledger. So if you have, say, 5 balance sheet accounts, building, land, vehicle, assets under construction, furniture and fixture, office equipment, for each of them, you should create the same account determinations for each of them. Account determinations we've seen is very simple. It's just a matter of taking a key, which is like you can have a 3-digit key, 910, or you can have 91000, or you can have 9100, for example. And the name of what name is going to be, land, building, plant, machine. You should try and keep your account determination name as same as your asset class name. So once you've done this, you go into the 8th step, which is create screen layout rules. We have done screen layout rules and what the screen layout contributes to your settings. When we did the GL, when we did AR, when we did AP, when we did banks. We have gone through this already 4 times. The screen layout rule specifies the status of the fields in the master record. So what are the field statuses? Standard SAP field statuses are suppressed, optional, and required. So if a field is marked as required, means the system will not allow you to progress until you have entered a valid value in that field. Optional means it is if you have something to enter, you enter. If you don't enter, the system will not stop you from progressing. A suppressed field or a field just for display, it is there for display purpose. So if there's anything in that field, it will only be displayed. It will usually come out as a grayed out field. So when you're doing it for asset, you use the screen layout to determine if the fields are required, optional, or suppressed completely. So in this step, you just create only the key and description of the screen layout. You define the field groups for the screen layouts themselves in the master data step. So right now, it won't be asking you to do much. You just have to give the naming convention. Once you're in configuring master data, you will have more details to put in them. Now, SAP has standard screen layouts, so you can either use the standard screen layout or you can copy the standard layout and rename it. The recommendation I'm making is that you'll copy a standard screen layout, say for land, which is the standard screen layout for land is 1200, and rename it according to what you'll want. So if you have building, plant machinery, vehicles, assets under construction, you will have screen layouts for each one of them. So once you're done with the screen layouts, the next step is to define number range intervals. Again, we have done this before in all the modules we have covered. You require the number range interval is required for the main asset number for the company code. As a rule, so when you create an asset, the number range you defined here will be picked up by the asset. So normally we specify internal number ranges for assets. We don't go with external number ranges, not when we are dealing with assets. That's the norm. If you want, you can have an external number range, means keeping track of what you're doing. And because each of your asset classes will have a separate number range, the same way each of your GL account groups had a separate number range, each of your vendor account groups was assigned a separate number range. Here too, the number ranges will be set according to your asset classes. Once the base work is done, in the 10th step, you will define your asset classes. Now, asset classes, like I said before, is to the asset accounting module what account groups are to the GL accounts, to the accounts receivable and account payable modules. So it works very much the same way. But the asset class is the most important criteria for structuring fixed assets from an accounting point of view. Every asset has to be assigned to exactly one asset class. You cannot create any asset without assigning it to an asset class. This is mandatory. The asset class is used to assign the asset to the correct general ledger account, because the asset class is also linked to the corresponding general ledger account in the GL module. Several asset classes can use the same account assignment, like in account determination. You can see that it is possible to make finer distinctions at the level of your asset class than at the level of general ledger account. So the most important tasks for asset classes are assignment of default values when creating an asset, grouping of assets for reporting purpose. You should group together assets with the same depreciation terms into an asset class. That is a thumb rule we follow. If the depreciation terms are going to be the same, we group them together. There is a step where you can specify chartered depreciation in dependence, screen layout, or account assignments. This is an optional step. Now, why is this necessary? Because you could have multiple company codes using the same chart of depreciation. And you might want the screen layout to be dependent on either the chart of depreciation or the account assignment. Generally, the control specification, the screen layout, and the account determination for asset classes apply throughout the client. That is, for all chart of depreciation. If it is therefore sufficient to make control specification once per asset class, you only need to carry out this step. If contrary to the usual case, you want control specifications to be country specific. That is, depending on the chart of depreciation, the system then uses the entries you make here on the chart of depreciation in the given company code. Normally, this is not required, so I put it optional, so don't do any configurations here. So this is the first part of, with these 10 steps, as a rule, we have created the organization structure of the asset accounting module. Now, when we look at the asset accounting module, we will have first step is organization structure. Second part rather, is the organization structure. The second part is how it will integrate with the general ledger. So the integration of the general ledger is the next step. Once we have decided these two, then we go into the valuation. Like how is define the depreciation area, specified APC values. The next step is valuation. Once you have done these, then you will go into depreciation. Once you have set depreciation, then you will configure the depreciation key. So I'm jumping ahead a bit. After that, you have master data. So yesterday we covered the integration with the general ledger. If you remember the accounts we had created. So when you're setting up the integration with the general ledger, you will have about 5 steps. The first step is define how depreciation areas post to the general ledger. Next, you will assign GL accounts, which are your asset for office equipment. Next, it will be GL account you need assigned is the accumulated depreciation on office equipment. The third step will be the expense account, where the depreciation is expensed. So these accounts are assigned in the next step. Once you've assigned the GL accounts, the next step you will specify the financial statement version for the asset report, because assets will come out in a report format. It will be part of your balance sheet. So you need to specify your financial statement version. So since we have not come to the part where we have defined financial statement version, you all can use a system generated the standard financial version statement for your asset reports when you're doing this configuration step. Next, you will specify document types for posting depreciation. Here, the standard document type is AF. I do not advise you to create anything new. Just use the standard document type for posting depreciation. And last, you will specify intervals and posting rules. So intervals and posting rules are basically, will it be done monthly? What would be the options we will have over here? Can anyone from your accounting background and finance background, can someone tell me? What would be the normal posting cycles for assets?
Post depreciation monthly.
Yes.
You place into service whenever it is in service, so that could be monthly, quarterly.
Okay, fine. It just flows from that. You could either have a posting cycle monthly, quarterly, semi-annual, or annual posting. If you're in a service industry where you don't carry much assets, you could do it quarterly or semi-annual. But if you're in manufacturing, you'll want to post your depreciation on a monthly basis, because the depreciation also affects your costing structure. So the first 2 steps we covered part of this. So we have done organization structure, we have done integration. Next, we come to valuation, where we define the depreciation areas. Just remember, the depreciation areas we have already defined once before. When we copied the chart of depreciation, we copied the depreciation areas with it. So in under valuation, we define depreciation areas, we define transfer of APC values, we specify depreciation terms, depreciation areas in asset classes. We specify for low value assets, which is important. You don't have to do it. what would be the maximum amount for an asset to be considered a low value asset? So in many companies, if an asset is less than $500, it is expense. So that means it is capitalized and then written off. Usually with things like calculators, telephone instruments, mobile phones, these are things that companies tend to write off the moment they purchase rather than keep it in the asset. Because if you keep anything in your asset, it means you have to track it until the end of its life. So for small insignificant amounts of objects that are considered an asset, you write them off. But you can't just expense it. The accounting principles require you to capitalize and write off. So if I buy a low value equipment, I can't just expense it to general expenses. I will have to first capitalize it. Once I capitalize it, I will have to write it off 100%. That is the way all audit and accounting principles require you to handle anything that is to do with assets. Under valuation, most of the steps which I've given you in your document will be optional. So if it's optional right now, don't go into it. So only under valuation, what we have to concentrate on is 1, depreciation areas. 2, specify transfer of APC values. 3, specify transfer of depreciation terms. Determine depreciation areas for asset classes. And these 4 are optional. So just go with these 4, and the rest is there for your practice when you're doing something on your own. So for valuations, these are the main steps. So once you have done the valuation, you come into depreciation. This is where you determine depreciation areas for special depreciation. Unlikely to have it, so we will just go over it briefly. Calculate ordinary depreciation before special depreciation. Determine depreciation areas for unplanned depreciation. Unplanned depreciation is something that has to be set up whether you have the scenario or not, basically because it is on contingency. So under depreciation, we determine depreciation areas for special depreciation. There is not much to this because basically you have to double click and just select all values allowed. Now calculate ordinary depreciation before special depreciation. The order of depreciation calculation can be changed. In the standard system, ordinary depreciation is calculated before special depreciation. As a rule, this is the way it is supposed to be done. So we will not make any changes here. What is important is unplanned depreciation. Can anyone give me a scenario where you would need unplanned depreciation?
Intangible assets like
Just give me a scenario for unplanned depreciation. Come on, all of you all are working finance people and accountants. You should be able to give me a scenario for unplanned depreciation.
I have a strange scenario, but it happened in our company. Something was not placed into service. It just happened to switch over our fiscal calendar before they told us that it went into service. So it went into service in a previous year, and so the depreciation for the previous year posted to unplanned depreciation.
Okay, that is one way of handling.
As the catch-up.
Yes, that is unusual and a good one. You could any asset of yours could be damaged, and the damage has reduced the value of the asset. A car has met with an office vehicle has met with an accident. These are unplanned contingencies which you don't really plan for. So now you have to write down the value of in the books of account to match the value in real life. So a damage to any asset will cause unplanned depreciation to come into play. So once we have done, so you do organization structures. Next step is integration with general ledger. You come to your evaluation. You do your configure your depreciation, and then you configure your depreciation key. With that, you're more or less ready to go into your master data. When it comes to master data, 2 steps. You define your screen layout for your asset master. You define the screen layout for asset depreciation areas. And with this, you're ready to go and start working within the asset module. Okay, so let's look at the SAP system now. Let's go to FS00 and have a look at our you have to before you start configuring assets, good idea first to come in here and create your GL accounts. Now under company code 91A1, I have created land, buildings, furniture, machinery, and vehicles. Next, I have created the same, the accumulated depreciation will accounts are going to be. So I have same land, buildings, machine, equipment, furniture, vehicles. This takes care of the fixed assets balance sheet accounts. Would you like to take the next question? What would be the depreciation entry past? The depreciation entries. When you're passing a depreciation entry, what is the nature of the depreciation accounting entries?
It will be a contra asset account or a contra.
Okay.
Depreciation account it has 2 asset accounts.
Okay, when you're looking at assets, there are many stages where you will have to generate accounting entries. The first is when you capitalize it, when you procure an asset. So you will have an accounting entry then. That would be for acquisitions. Once you acquire an asset, you will be generating accounts on a monthly basis, which will be posting to your depreciation account. So depreciation expense account would be debited. The credit would go to the accumulated depreciation account. Correct?
Yes.
Okay. So you have one entry in asset accounting entry, which will be your acquisition. Next, on basis of that, you will be generating accounting entries for depreciation expense. And then finally, when you're retiring an asset, you will have another entry. So these are the normal accounting entries which you would have. So along with the fixed asset account, the balance sheet accounts, you will also have depreciation expense accounts, where your monthly depreciation which you are expensing will be reflected. So in this company code, I have set up for land, building, furniture, machinery, and vehicles. The nature of the first 2, accumulated depreciation and the acquisition value, will go into your fixed assets, into your balance sheet account. The third, which is a depreciation expense, will go into your general profit and loss or your expense accounts. It will be basically a PL statement. So have just make sure that you'll have at least done this. You can copy from this and use the same one, or copy from a standard SAP standard and use it. Can you see my IMG screen?
Yes.
Yesterday we had defined some asset classes. I had taken you through land, buildings, vehicles. So my recommendation to you all was copy the standard real estate and use your own numbering logic and rename it as real estate. Take 110, which is the SAP standard for buildings, and create your own. There is not much when you're to doing this. Say if you want to create furniture and fixtures, you can just go to the copy over here. Everything is which required is already here. You just change this. If your number range is 4,000, you make it 4,000. Or say 4,005. You can keep everything the same. The account determination you would set up earlier, you use that account determination. You have set up screen layouts rules before coming here. You pick up your screen layout rule from here. Earlier, you would have created some screen layout rules. I'm not seeing anything from anyone in quite a lot of areas. So it's just simple. And this is the number range which you have to assign. So number range 01, 02, 03. So all your number, whatever you have entered in number range 03 will be picked up by the system when it comes to numbering here. And that is how you define your.
Hey, you know, ZaranTech now offers SAP corporate training. That's right. Train your workforce in SAP with our comprehensive program. We offer customized courses, certified trainers, and hands-on labs for both individuals and businesses. Our standout features? Bespoke training, fully configured servers for practice, in-house materials, and a dedicated LMS. Plus, get session recordings and 24/7 support. From functional to technical modules, we have got it all. Choose ZaranTech for SAP training and watch your team excel. Learn, upskill, succeed with ZaranTech.
Next, we saw this where I created some accounts. So chart of depreciation. This is your chart of depreciation. And this is the account determination. This is look on top, chart of depreciation, chart of accounts is this. So you will get your chart of depreciation. What is the chart of accounts you have created? I had taken 9,001 land. In this step, if I have defined 3 depreciation areas, for each depreciation area, I have to do the same thing. I have to put the balance sheet account for APC, and I have to fill in all this.
And what does APC stand for?
Accumulated depreciation. That is basically that's what it comes down to. So basically, if you're looking at APC stands for acquisition and production costs. Acquisition means any asset which you may acquire or purchase externally. It includes the invoice price and other related expenses. Like usually when you're capitalizing an asset, you will also include custom, octroi, freight. All these costs are normally added into the value of acquisition.
When I did this, when I went into the book depreciation area, maybe if you can show it on the screen, I can tell you what
Okay.
might be easier for me to.
Oh, you can. Okay. Let's have the issue.
So when I went into the book depreciation area, when I looked at the details, there was this option of making it the leading ledger. What does that mean?
Okay. If you're using new GL, you can have parallel ledgers. Previously, in the older version of SAP, we would have parallel currencies. So you could maintain your ledger in parallel currency. So you could have one for your local country specific currency. You could have a group currency. We took out the various ledgers we needed as on the basis of parallel currency. With the new GL, you could maintain different ledgers. One ledger, which we call the leading ledger, that ledger is your main books of accounts. But we have an option of maintaining multiple ledgers. So you could maintain a ledger for tax accounting, or you could maintain another ledger for group reporting or group accounting, for consolidation purpose. If you're a multinational company having many companies under you, you want to consolidate all the accounts in one place, you could create a ledger for that. This came into view. This is a topic also which we'll be covering. It is basically the new. Let me just go in over here and show it to you. You see financial accounting? Can you see my screen?
Yes.
Okay. Now this is the old screen. If you've activated financial accounting new, you would get this additional node, which will be financial accounting new, and you will get a few other nodes, new nodes that will come in. So in financial accounting, you have, I'll just open this out. You can have, like, I have set up for the purpose of a Y1 ledger for tax, local tax reporting, and a ledger for tax. So OL is my leading ledger, which is my main books of accounts, and I can have two others. So if I go into new entries, I can create these ledgers which are required. You get the concept of ledgers?
Okay.
So basically, the one ledger has to be as leading ledger. The leading ledger is based on the same accounting principle as the consolidated financial statement. So your leading ledger will be your based on, say your company code is in US, it will be based on US GAAP. Or if it's in India, it will be based on Indian accounting standards. Or Europe IAS. So you have the option also of maintaining your ledgers on the basis of international accounting standards. So your leading ledger can be the one you're using. You can set, if I'm an Indian company, I've set up my ledger as per the Indian requirements. I can also set up another ledger, a non-leading ledger, which will take the values from the leading ledger but do it as per the accounting principles of the US GAAP. Or if I can set up another ledger, non-leading ledger, which can be set up as per the accounting principles of the international accounting standards which Europe uses. All the Euro companies follow. Is that a little bit more clear now?
Yes.
Okay. Basically, this made the use of parallel currencies a bit obsolete. Okay, this is the screen where you, yes. So in this step, you assign your balance sheet accounts and the depreciation accounts for asset accounting. So this is my chart of account. So here you select your chart of account and then you double click on choose account allocation. Which screen of mine can you all see?
Chart of account view.
Chart of accounts.
Okay, the IMG you're not seeing, right? I'm just clicking out of it. Now, this is what we had created. So basically, this is just you'll just replicate whatever you do in book in 20 and in 64. So, so an acquisition, you'll put in the acquisition value. So you can have your asset clearing account, your clearing capitalizing account, your acquisition from affiliated company. You can decide what GLs are going to be put in over here. This is where also you set up your gain from sale of assets, loss from sale of assets, loss made from retirement. Acquisition down payments, balance sheet account. This is where you put your balance sheet account in. So for now, you just need to concentrate on the first part, the balance sheet. So right now, refunds and all, you will not be setting up. So you'll need a gain, you create a gain loss account, gain from sale of fixed asset, loss on sale of fixed asset, loss on retirement without revenue, clearing account for revenue on sale of asset. So this is where you set up your accounts. So gain loss account, I don't think we have set up any. So you need to set up, just make a note of it. You need to set up along with your asset accounts and accumulated depreciation account, you will also need to set up your accounts for gain loss.
Can that be one account? Is there anything against that being one account and just say it's the gain or loss on
You can
sale
have
of
just
asset?
one account, assign it to that. You can have one account, you can have two accounts.
Okay.
So accordingly, you have to set it up. So here you set up your depreciation, where the depreciation expense account for ordinary depreciation, expense. You can just set up one over here, which is accumulated depreciation account for ordinary depreciation and the expense account for ordinary depreciation. That will be set up here. You don't need to, for planned and unplanned, you can use the same GL accounts. For special reserves, right now, you don't need to do anything. You have to do this for every depreciation area and for every asset account determination you have set up. Because this particular screens are done on the basis not of your asset classes, but on the basis of your account determination. Because what we said earlier was account determination is the key factor for determining the integration between the asset accounting module and the general ledger. So for your chart of account, first step, your chart of account. Second step is your account determination, which you have set up. I had set up for practice purpose. I had set up 9, 1, 2, 3, 4, 5. Your balance sheet, you have to do it for all the depreciation areas you have created. This actually was something went wrong with the system. It hung, so I'm getting an additional depreciation area in some places. I think some of you might have had the same issue where the system hung. And your depreciation. This part will take care of your integration aspects. Now, financial statement, specify your financial statement, which is the next part. This is a simple step to follow. You go to your company code, which you have created, 91A1, assign financial statements. I have taken INT for everything. You can have a separate financial statement version for each of your depreciation areas. So you can have this. You can create one standard for your balance sheet. You can create one for your group accounting. So the financial statement version will be like in cons. You can just copy one of these. I think the US company code, right?
Yes.
Have US company code.
Yes.
So you all can leave one as INT, which is the international, and for a second one, you all can try and assign it to any of the US standards.
Okay.
So each of your depreciation areas, you need to assign to a financial statement version. You can have the same version, or you can have multiple versions working over here. Now, we won't be going into segment reporting right now. We will do that at a later stage. Now the we discussed just a little while ago, parallel accounting principles, which is now obsolete with the new GL. We don't need that now. Previously, instead of the leading ledger, the non-leading ledgers, we used to use parallel accounting principles. But with the new GL, it has now become obsolete. Now, when you're working, it is a good idea to always come here and set your chart of depreciation. So every time you work in the system, it will pick up the chart of depreciation. You don't have to select it every time. This is already in an earlier step, so we won't be doing anything here. So with the financial statement, you specify document types for depreciation posting. These are the standard documents. AE is accounting document. AF is the you can use either AE, OAF, OBA. Choice is yours. AF is the standard accounting depreciation document. So you could use that, or you can use the accounting document. With that, you have completed this entire segment. So you've done the next step would be valuation. Now, in the valuation, when you're doing valuation, the first step of valuation is to define depreciation areas. But you have when you were setting your organization structure, you copied your chart of account. When you copied your chart of account, you would have copied the depreciation areas and modified the depreciation areas. So when you come here, there's nothing really to do because all this will be already set up for you. Because I've copied, everything will come as what it was when I copied from my. So specify transfer value. If you want to make any changes, you could make your changes over here. Now we look at the specified transfer of APC values. What exactly does this screen do? The standard system copies the asset balance sheet values from depreciation area 01 to all other depreciation areas during posting. So we don't actually do, if we have depreciation areas like we have over here, book, local reporting, 1, 20, 30, 60. We will actually only be transacting in 01. And from 01, the posting will be done to the other depreciation areas you create. So in the standard system, copies the asset balance sheet values from depreciation areas 01 to all other depreciation areas during posting. The only exceptions to this rule are areas for revaluation and for investment support. If you have a depreciation area for investment support or for revaluation, it will not take it from here. Therefore, you need to carry out this step if you want to copy posting values from different depreciation areas, not depreciation area 01. So, in any area where you want to copy something from another depreciation area, you will have to do this step. In this step, you define transfer rules for posting values of depreciation areas. These transfer rules let you ensure that certain depreciation areas have identical values. We will just keep it at this only. Specifying depreciation terms. We do not need to do any configuration here, because in our scenario, we want depreciation terms for area or additional areas to be identical. Therefore, this does not require any configuration from. Next is determine depreciation areas for asset classes. Now, this is an important step which you have to do. So basically, you select your asset class, you will double click on depreciation areas, remove the deactivation tick and specify the default depreciation keys and the screen layout. It may also happen that you will not be able to maintain the default depreciation key, as the field may appear gray out. So in this, we have to go through another step and activate maintenance level of the depreciation key. So this is the depreciation keys that are preset in zero depreciation. This is land. So normally in land, you don't have any depreciation done. So this is set up as is. You don't need to change it. Let's go to buildings. GD is a declining balance method. These are the preset ones. You can create your own depreciation key and assign it to your asset class over here. A declining method 1, building straight line 2. These are the SAP standard ones set up. You can set your own, create your own depreciation key and assign it here. This is the screen layout. Main depreciation on main asset number level. So we will keep that the same. So this is where you set up, like over here it is straight line Alina. Straight line accumulated value pro rata with installments. So as you can see, for book, they have one depreciation key for local reporting, one for book depreciation, another key setup. So you can set up your depreciation key, basically holds how the percentage, what is the basis for calculating depreciation. So you can create your own depreciation key and assign it over here. Now, the most of the steps which I've given in your document is optional. So for starters, you don't need to do it, and let's do the base one first before you'll go any further. So more or less everything else is, and up to this part we have next to go to depreciation. So I won't go further than this today. I'll give you all time to do a catch up. I'll take you all through the last two areas of fixed asset. Which is basically depreciation and configuring the depreciation key. Then you all will have the weekend to do your configuration of the entire system.
I'm guessing I missed something. So in setting up my chart of accounts, when I
Okay.
was doing the reconciliation account for my AP trade, I selected the vendors and I get this message.
So balance of reconciliation account only in local currency is not defined. There is a field which click out of this and go to balance in local currency. That you have ticked over here, right?
Oh,
Okay. Now try and save it.
perfect. All right. There were a few like that, so that's the fix for all of them. That's all I
Just
have. So-
read the error message. Usually the error message will tell you when you're doing AR, AP, and GL, the normal problems you'll have are a tolerance group has not been defined well.
Yeah.
Group tolerance, employee tolerance, number ranges are missing. Your or something is not filled in right.
Yeah.
So it will give you a good hint.
Okay. Well, that was all.
Okay.
There was just a few I wasn't able. But now we need to add, what were the other, the gain and loss on a
Gain
sale.
loss account. You can also set
Okay.
up a foreign exchange gain loss because we'll be covering that. So gain loss in foreign exchange, gain loss on sale of fixed assets, your depreciation.
I
Do
have
it in
all
such a
that.
way that the numbering sequences will be how you want it reflected in your balance sheet or in your
Yeah.
profit and loss account.
Yeah, so this, I have all my depreciation expense, accumulated depreciation.
Okay, all together. So that makes it easier for you to set it
Yeah.
up in. Okay, great.
Yep. So, okay. Okay, that was all.